Hey guys, welcome to this first ever video that I'm uploading on this channel. So bear with me, be patient, and if I say anything wrong or anything goes wrong, just leave a feedback on the comment section below and I'll be more than happy to learn and improve myself. So this being said, the topic of the day, firstly, before I go to the topic of the day, I want you guys to understand why I'm doing this is because I see a lot of people learning a lot of stuff, but majority of the traders out there nowadays, they struggle so much to put things together. Okay, they start so much on building the narrative and putting all the pieces together because there are so many information out there that one individual get always lost after absorbing so many information from everywhere. And I know this because me personally, I had to go through this for such a long time, and it took me so long before I was able to pull everything together to give some sense on what I was doing. So hopefully my aim will be mostly to try to help you guys to start putting things together. And the reason I'm saying this is because the topic I'm bringing today is about order block. And is a concept that probably you heard it if you are an SMC trader. If not, let me know. I'll be more than happy to make a video about it in depth. But the thing is like about order block is a lot of people I heard complaining and saying that they don't know which order block they should be choosing as they see order block everywhere. Now, you guys have to understand that in order for you to use a specific tools, in this case, specific things like order block, you have to understand that it's so important that you don't use by itself. And what do I mean by this is that everything that you're learning about trading is always going to be part of something bigger, right? So you have to use that in combination with so many confluences and mostly as a part of a narrative. Now, let's start with order block. So I want you guys to understand that, every day, every time the market does the same thing, right? So the way you see it, the way you start building your narrative is what start giving you the most sense. Now, in this case, this is the structure of price. We have a high, we have a low. And if you're an SMC trader, by now you already know that you should never ever look anything below the 50%, right? So people always say premium, discounted, whatsoever. I'm not here to tell you fancy name. I'm here to help you to understand the concept and how you can use that, okay? And if you need to know more about the premium, discounted, and FIBO, again, let me know. I'll be more than happy to make a video and do it for you. So what we have here is that you know already that you should never ever be looking for any trade below this level. Now, already knowing this is a very important information for you to start putting things together. That means that you should never ever look for an order block over here, an order block over here. Anything, you just start analyzing and giving priority to this side of the range. Okay, that's the most important thing. Now, secondly, once you do this, now you start to moving to the next one, which is prioritizing order block. Again, how do you prioritize order block? You have to always ask yourself the right question, because learning what is an order block, which is the last buy before the sell, last sell before the buy, is not enough. What is that order block actually telling you? Okay, what is the role, what is the purpose of that order block in this specific range? Now, the way I will help you to understand this is not all the order blocks are the same, and understanding the functionality of each of them will help you to define the importance of it. So we have the first one, which is the stop hunt. So usually that order block, if it's an order block that is something like this, so let's say this is a golfing, all right, and then you have something like this, all right, you can already see that in this range, in this order block, in this area, all right, this was a stop hunt before price started going to the downside. So what happened after price stopped everybody else? They have to come back later at one point, mitigate their orders, close everything, and then going away. So this is already one type of order block, and you can start looking inside this range. Then there is another one, which is the momentum, because you will not always have order block stopping people out. Sometimes you might have something like this, where you have a simple candle, right? And then it's followed by a huge engulfing. Now, this one, why this one is important is because it's telling you that something happened over here in order for them to release this huge candle to the downside. And most importantly, if you have imbalances over here, which is something that I'm not touching now, but if I'll probably make more videos about it in the future, then that's an extra confirmation for you. Now that you know that here you have two types of things that you can look for, obviously there are different other variation of order block, what an order block can do, but those are the key things that I'm sharing right now for you so you can use it to backtest. And the important things that you have to understand is that people are so upset to the fact that, oh, if price touch my order block, then I'm definitely going to be in profit. No, that's not the case. Once you identify the right order block and you know the purpose the order block is playing within the range, you will know that with high probability, price will give you a reaction from it. And what happens if price gives you a reaction from it? Well, the way I see it is this. When price comes to an order block, so let's say price now start retracing and comes over here, right? What's going to happen? Okay, first thing is that high probability price will give a reaction. High probability price will go to your TP, or high probability it can smash through it. Now, the way I see it is that you have three things that can happen where two things are in your favor. So it's like pretty much you have two odds again on your favor out of three. So when you have a price giving you a reaction, this allows you to go break even immediately. So you're already protecting your capital. And if obviously this plays out, then you go TP and you gain some profit. And if you hit a stop loss or this goes through, well, this is a losing trade. However, as you can see, you have two things that goes on your favor. Now, once you understand that, the next thing you have to do is start putting together. So now we're gonna go on the chart and I'll show you, okay, what I mean about everything that I explained over here. So let's take literally this one. So let's take somewhere. Okay, let me see. Where is my reply bar? Okay, let's start from somewhere around here, right? Now you can see that in this range we have this high that made this low. So what did I tell you before? If you're an SMC trader, you pull your fib, right? So now again we have our zones. You don't have to look anything below it. So that means that anything here is out of context, right? You don't take anything out of it. So you can already see where I'm going next, right? You can clearly see that there is a beautiful, one second, where is it? There is a, oops, sorry. Okay, there's a beautiful order block over here, right? Check this out. So now I have this order block. Now, another thing that I have to mention it is that, okay, so there is an order block over here. So you can clearly see that, of course, okay? Now, one thing that I have to mention here is that a lot of traders, what they do is like, they love to take the trades from the opening or from the 50%, okay, and probably they put the stop loss sometimes above the closing of the candle. And me, honestly, I don't like this, and the simple reason for it is because it's always good to give some breathing room. So if anything, I will put probably my stop loss above the high, and that's it, because it's always good to give a breathing room. And the reason for it is because if price goes there and it hits your stop loss and then plays out, you're just gonna be starting acting with your emotions, and you're gonna be starting making a lot of mistakes. So you're gonna be taking the wrong trades, wrong decisions, FOMO, greedy, and so on. So just to be safe, put a little, always try to put it above and higher. Obviously, that goes down to you because everyone has their own way to trade, right? Now, this being said, let's go and understand what's going on here. So you can see that now I have this as a first POY. So already this is starting and building a narrative, because I know this is my range. I know I shouldn't be looking for anything here. If I go down now and I have this POY, so I have to wait. What can I do? As I said before, I can do like the 50%, okay, of the range. There we go. So let's say put 50% over here. Now I know that that's my POY, and what I can do, okay, I know a lot of people, they usually leave their, sorry, once again, they usually leave a pending order like this, okay, and off we go. So they target for a new low and they're done. Or some people, they'll wait for price to reach that specific level, and they'll be like, okay, I'll wait for a smaller time frame confirmation and then I'm taking the trades, which is both valid, but obviously based on whatever action you're taking, you have to always make sure that you know how you're dealing with your risk management. So in this case, that seems like a pretty nice and solid setup, and let's see what happened next. So let's put play. All right, we're going higher, price is moving higher, price is moving higher, price is moving higher. Okay, 1 second. Now, okay, very important one here is that, check this out. We know that was the zone where we would probably look for a potential sell. Now you can clearly see what happened is that price did not reach this zone. However, what happened is that price broke the structure, right? So price started breaking the structure. Once price broke the structure, guess what are we going to do now? The same things. We're taking the high, we're taking the low, measure our 50%, which is here. And now it's getting interesting because you can see clearly we have two zones, which is one here, right? And then we have another one, which is the most extreme. Now, in this case, you see, many will be like, okay, but why you're not taking this one? Like this last buy before the sell. Now, what I do personally, when I see this type of scenario, I go higher time frame. So I start going higher till I don't see something cleaner, like very neat and clean. Here we go. Look at this. That's a beautiful one. You see, we have this last buy before the move down. Now, obviously, in this case, if the range is higher, what I love to do is, I just take the 50% of the zone, right? And let's mark this out. All right, here we go. Beautiful. So now I just wait for price again, as we did before, to reach that zone. So in this case, we're looking again for a sell. Could be nice 4 pip stop loss. Let's put a little bit higher. Careful with the spread because it's GBP/HF. And yeah, I think that should be fine. And then you got the same thing. You can do above as well. So you take your 50%. You can put it here. Now, I'm not going into your risk management. I'm not going to tell you, oh, put 1% here, 1%. No, that's really up to you. You have to figure out how you want to deal with it, how much you want to risk per trade, or what type of way you should be taking your trades. But this is just from a technical perspective for me to explain you how the concept works. Okay, so let's see what happened next, right? So let's go to 1 hour. Hopefully we will see what's gonna happen over here. Let's play it. Oh, look at this. Damn, that was beautiful. All right, I was not expecting that. Okay, look at this. So you can clearly see the price stepped to it. So what did I say before? You have 2 things on your favor compared to 3, which is having a reaction from the zone. So by now you should be already break even, because this is already 1 to 3, 1 to 6. If I target a lower low as a minimum, right, that can be a nice 1 to 10. So let's say from here a nice 1 to 10. And if I play put, let's see what happened next. Oh, look at this. Beautiful. You see, we had a tip. We hit a TP with a beautiful 1 to 10. Do you guys understand where I'm going with this? So, using the order block by itself is just not enough. You have to understand how to putting things together and how to building a narrative. As you can see here, I did not only solely based my understanding on the order block, I started also using the range, using the premium discounted area above the 50%. I started spotting my order block. If everything was confusing, I started switching the time frame to see what the higher time frame is telling me. And then, by the way, look at this. Oh my God, I didn't realize this. Okay, look at this. Now, this is very, very beautiful. Look, this was still the higher time frame range, right? Sorry about that. Look at this. All right. So this is the high, this is the low. You can see price retraced. We were expecting initially price to get here. As you can see, it didn't get it. In my POY at the beginning, it broke the structure, so I tried to take the short from here. They already gave me a nice 1 to 10. However, this low did not make a new low. So the range is still within the bigger range. So price came here, it tapped to this level, right? And it gave a beautiful reaction. Now, not sure if it would play out or not, but what I know is I'm already break even because it's a nice 123.79. And yeah, let's see what happened next. Let's play. All right, price went a little higher, and then that's it, done. So you can see that once you understand the concept of it, you can literally put in practice with different time frames as well. Literally the way I did it here, right? So I was expecting for a bigger price range to play out from here. It didn't play out. I was still capable of managing taking this trade, and then later price still came back to my POY. It was still valid because the range was still the bigger range that we had initially, right? This was the leg. And as you can see, price came, activated the pending order. Now we're expecting price to go all the way down here. So obviously the first TP, it can be easily a 1 to 8. And then, yeah, you can take it down 1 to 10 as well, based on what is on the left. That's it. So I hope this video was helpful for you guys, but you can clearly see that if you start putting and blending things together, it gives you a clear understanding on what you should be doing instead of seeing order block everywhere. Like for example, you see an order block here, right? Okay, do I take this? Is this order block valid? Why is it valid or not? Well, simply because this is the last low that made the last high. So price came here. It gave you a nice reaction to the upside. Unfortunately, later on, it would have taken you out. But already from here to here, it was more than okay for you to take the trade, right? But then, obviously, you can pick every order block wherever you see. You have to always think about the ranges. Like in this case, again, you put the Fibo, you start looking on the bottom of it, 50%, that was the only order block you had. And that's it, that was your point of interest. So you focus solely only on that specific point of interest. You shouldn't be looking for anything above or beyond that, right? And like for example here, now one more example, and then look at this. So from here to here, you have a high. Okay, obviously this is going to be a counter trend, so it's a different one. You can see that the last order block we have in this time frame, in this range, was definitely here. That's the cleanest one you can see in this leg. So obviously, when the market will open, I might see some reaction coming here, right? And then probably going down if the order flow in the higher time frame is respected. So hopefully, I hope you guys gain some value and something very useful for yourself. And if yes, then subscribe, turn on the bell notification, leave a comment below. And as I said, I'm more than happy to take any comment. Enjoy.